Hey everybody, welcome back to Ryan Makes Sense. Today we are doing a viewer requested video. Today we're going to be looking at underperforming sectors that have stocks over $10 that could be good potential value, but also a good potential buy. So what we're going to do is a few things. We're going to look at the underperforming sectors. We're going to create a scanner based off of that. We'll do stock price over $10, good gross margins, little debt, earnings per share growth this year, next year, positive, and a few other things. So let's go ahead and jump on in. Okay, so first thing we need to identify is the sectors that are underperforming this year. All right, so a quick Google search, consumer non-cyclical and conglomerates. So far, I believe this user wanted me to look at coal and furniture. So I think we could try and capture that. Let's see what we can do with our handy dandy screener. Okay, so let's view all. And the first thing we're gonna do is gonna go to price over $10 because I do not want to forget that. Price over $10. That brings us from 9,498 stocks to 6,845. So that was the first one. So the sector first is consumer non-cyclical. So we have consumer cyclical. Okay, so we want to look at, so before we move on, quickly, consumer cyclical, things that consumers spend their money on. A lot of people spend money on their cars, gas, maintenance, clothes, subscriptions, travel, etc. So what I've noticed with the consumer and where we're at today is record level high credit card debt. So a lot of this stuff is based on high credit card debt. So I feel like whenever we do have a crash or a credit event, I feel like the consumer cyclicals will fall out. So I do want to note that. However, the consumer is strong. I see a lot of layoffs going on, but I also see a lot of people getting hired. So let's update this. So excuse me, we want to have gross margins. Let's look over 25%. We're gonna look at quick ratio. We'll do over 1 for sure. All right, long-term debt, we want to be under 1. We want the shares float. Let's have the float under 100 million. All right, we went from 6,500 stocks to now 46. Okay, we want EPS growth this year to be positive and EPS growth next year. I want to say over 30%. Let's do over 20% just to be a little choosy. Okay, we're down to 11 stocks. We do want institutional transactions to be positive. All right, we now have 4 stocks for our retail. But if I take out the institutional transactions, it's so funny. The comment asked for furniture, and the first one is furniture. So we'll leave it at this, but let's see if there's any other things we can. Profitable. Do we want them to be profitable? I think we do. Let's just see profit positive. We'll take that out because these companies could be on the cusp of profitability. Okay, so we have Bassett Furniture. Let's just we'll look at the first 6. And so what we're going to do here is we're going to see if we can find value. So this sector is underperforming, number one. We want to look for companies that have a PE under 30. That makes them cheap. Under 50 makes them cheap as well. We want EPS growth this year, next year to be good. On the edge of profitability. All right, are consumers really buying furniture? I don't know. I haven't bought furniture in a long time. So this company is exactly almost to profitability. They are 5 million away from being profitable. So I'm glad I didn't exclude them. The forward price to earnings says that this is very cheap. They do have a dividend. I wish companies did not offer a dividend until they were over 1 billion in sales. This company's offering a dividend, which is fine. Oh my God, very low float. Almost profitable, very low price to earnings. This is okay. This is really good. This goes to show that shares are organically and naturally being accumulated. EPS really all over the place. I can't really go a direction there. But I want to see what their 2024 guidance is, because that's going to be important. Zacks never posts the guidance. I think they do that on purpose. All right. So Zacks, are they going to show what's next? Of course not. Okay, so Zacks again, not very helpful. I mean, based on this looks really cheap, but we need to find out if they are in trouble. Another Zacks? Come on. Okay, here we go. Yahoo Finance, please have 2024 guidance. Please, please. Revenue declined 20%. Ouch. Not profitable. Gross margin was very high. Sales dropping. Okay. Wholesale dropped 21%. Retail dropped 17%. Balance sheet remains robust. We'll look at that. Okay, they face significant headwinds as it reports a decrease in sales. Okay. Okay, so Bassett Furniture, I mean, let's run our number. Let's run our number here and see what we get. Because this one looks good on paper. Really, really, really good. So they make 368,990,000, but they lose 5,810,000. Not bad. Okay, and we're gonna go and look at our cash and debt. Cash, okay, so assets is 403 million, liabilities 219 million. That's decent. Let's look at quarterly actually. Okay, so 361 million assets, 180 million liabilities. That's a 2-to-1 ratio. That is awesome. But I mean, it could be better. So they have cash of plus 58,380,000. They have a total debt of 95,310,000. Okay, so really quickly before I go on with my calculation, long-term debt, slightly better than what it was last quarter. Total liabilities, a lot better than last quarter. Cash at an all-time low, it looks like, actually. So, interesting. I consider these vanity metrics. When the insiders do little sales like this for like 14, 15,000, it just shows me that there's no confidence and that they did this to show up on scanners where insiders are buying, but come on. That's pretty weak, but I mean, no red flags. That's all we care about. There's no red flags here on the balance sheet. It does look really good. The income statement, for every $38 they spend, they get 86 back. That is a great return. Again, I think their gross margins, was it 50%? Yeah, 53%. That's really good. Okay, back to our calculation. So we have this, and then we're going to divide this by 8,140,000. That is our shares float. This is a potential $40 stock, which it's almost traded that high before. Stifle has it at a $36, so pretty close. What are institutions and hedge funds doing? This is a 200% possible opportunity from what I'm seeing, BSET. If institutions are somewhat like me, which they kind of are, I think they're buying. So institutions, it says that they own 54%, but you also have to consider they're in a decline right now. So went from 54%, it might be less. It's at 69%. So about a 15% increase. Let's see what Vanguard and BlackRock are doing because they own everything. Vanguard slightly decreased, Dimensional Fund slightly decreased, and Aegis Financial slightly increased. Where's BlackRock? BlackRock never goes anywhere without Vanguard. BlackRock owns 167,000 shares. Okay. So again, this furniture stock is in a decline. Nobody likes to buy stocks when they're going down. However, I think we are okay to wait for this one to go down more. I say that, well, I say that because they disappointed on Q1. Q2, they're going to have in August. So, I mean, you know, that's just my observation. This stock has been going down for 7 years since its high. If you bought any time in the last 7 years, you're upset. Oh wait, what am I doing? Okay, let's see. I just want to check here. BSET. Awesome. I've drawn this one before. Okay, so what I want to see here is this falling within my lines, and what is the momentum looking like? All right. This was the indicator to buy, but it's been pretty weak since then, so we actually might have a good opportunity. Ooh, it's fallen under. I think we might see $9, you guys. And we got our arrow here saying it's going down. I think we might see $9. Very interesting. It's fallen out of the channel, and I think I think we might see $9. So Bassett Furniture, I would wait for this one. That was a good little quick, that wasn't really quick, but that was a nice little analysis. Okay, going into our next stock. Sorry for that little tangent. This is internet retail in Israel. They are not profitable and they are not very close. They make 569 million, but they lose 133 million. They have $5 billion market cap. That's pretty good. Historically speaking, this is a good bullish pattern. This is a bull flag, but we also see we have strength going down, momentum going down, money flow going down, and relative momentum going down. So I think, but look at this. This is beautiful. How can you ever argue with that? That is beautiful. This is not good. They are diluting slowly. EPS is kind of flat. Let's see what insiders are doing. Is it vanity metrics or are they really buying? We don't see it. E-commerce solutions. that's my quick and dirty. I don't want to go in deep dive all 11 of these stocks, but I do like where this one's going. Very little debt, quick ratios, adequate. These are very good. EPS past 5 years is 70%. So you know this company has been reliable. Sales over the past 5 years, again, very reliable when you have that kind of data. Not profitable, but they are growing at a great clip. 8% shorts, a bit. So that's my take on this one. $33 for this, I think, is decent. I'll let you guys be the judge of that. Let me know if you have any questions on GLBE, and I'll be happy to go in deeper. Outdoors, this is leisure. What do we got going on here? Nice, slow downtrend. Kind of like what I like to see. The momentum is confused. Strength is low. That is not good. Money flow is definitely low. Relative momentum is in the gutter. Profitable company. It is cheap in the future. Very low float. EPS for the past 5 years, not very high confidence. Sales over the past 5 years, 5%. Ooh, this is scary. EPS is going down. We don't like to see that. Sales are pretty flat. Shares outstanding, kind of flat. I really have no position on this one. What do they do? Manufacturing and marketing of seasonal outdoor recreation products, fishing, camping, watercraft, diving. So, yeah, I will let you guys be the judge of this one. Every $422 they spend, they get $663 back. Decent margins. What is their assets? Total assets 681, total liabilities 181. That's a good ratio. It's a good ratio. The stock is at $45, the same that it was back in 2018. This has been around for a long, 1988. Wow. 1988 to 2010, 22 years to bottom, and then a nice move. Huge, nice move. I think we're going to see this go down. This blue line right here that you guys are seeing is my 365-day SMA. I want to see it at least touch that. So I think we have some time to watch Johnson come down a little bit more. So we'll see where that goes. Liquidity services. Is this like a liquidity warehouse? I mean, I'm very interested. It's a provision of e-commerce solutions to manage value and sell inventory and equipment for business and small and government clients, not small. Okay, Gov Deals, Capital Asset Group. Very interesting. Gross margins are over 50%, it looks like. Gross margins, 51%. This is awesome. EPS going down, that's a little worrisome, but sales are going up and shares outstanding are naturally, organically going down. That's positive. They are profitable. They are considered cheap in the future if they continue on this trajectory. That is good to know. The bigger picture, let's see what the bigger picture looks like. All right, this one actually consolidated for about 5 years and then shot up. And it's kind of consolidating again. So very, very interesting. Let's just see what institutions are doing with LQDT. That's what I meant. All right. Institutions currently own 71%. That is older data. And I do say older because FinViz does not update as often as this website right here. 79%. So that is a nice little increase. And you can actually see this is rising slowly. So nice little observation. Stanley Capital has decreased a little bit. Forum Capital's decreased. Graham decreased. Renaissance Technology increased. Vanguard decreased. BlackRock decreased. So little observations there. Not a bad company to own, really. I just think it's going to be in a long period of not expansion, a long period of consolidation. We see decent support at $12 here. So that's my observation. You guys let me know what you think. Mercado Libre, I do own a nice position in this one in my long-term portfolio. All right, I do see it coming and test. Oh crap, I just messed that up. I do see it coming and testing $1,403, possibly $1,300. So just a heads up on that, just at a high level. Strength is going down, momentum going down, money flow going down. Relative momentum is still pretty hot. So again, I think this one might go down, but I'm a long-term holder. You cannot argue with these facts. You want to see this, you want to see this, and you want to see natural accumulation. This has been pretty flat. I'm not trying to push my books here. They are profitable. They do offer a dividend. That's fine. Institutions are buying. Again, it's pretty expensive currently. At the current trajectory, it will be less expensive, but it'll still be pretty expensive. So I think we want to see it hang around this 14, 15 level for at least a few more months, the minimum. No rush. They might do a split, so who knows. But Mercado Libre, this one's just super solid. I love this one. Let me know if you have any questions on that. This one gives me FOMO. I'm pissed. I'm annoyed about this one. Yeah, no comment. They are profitable. They are the price to earning is insane. So people in India must have money to blow. This is in India because look at this. This is insane. It is very expensive right now. In the future, it is very expensive. I'm not even going to dig any deeper. It's expensive. So let's look at the next few stocks after that one. I think so far Bassett Furniture was pretty good. I liked LQDT, JOUT. Those are my top 3 so far. Let's see what Rocky Brands is. Footwear and accessories. Interesting. Rocky. I don't know. Like, we'll check. We'll check. Wow. Huge. Are they being bought out? What happened? No, they just had a really good quarter. Okay. Okay, so Rocky Brands engages in the design, manufacture, marketing of footwear and apparel. It includes Rocky, Georgia Boot, Durango, Lehigh, and Michelin. Okay, pretty basic. Pretty basic. Great margins. Profitable. Let's see what their cash is. Very low cash. Total assets 490 million. Total liabilities 267. Not bad. Gosh, I'm really tempted to check the price of this one. Let's not. We can see that they're profitable. That's great. The forward price earnings. This is very cheap for this sector, the footwear sector. Check out Nike, designer brands, Dillard's, Foot Locker. Check out all those PEs compared to this. This looks actually really attractive. What are institutions doing, by the way? Let's find out. I'm going to guess institutions are buying. It says institutions own 91%. Yeah, and it's at record levels of ownership. Old data says 75%, so 20% increase. That is mad. That is mad. 20% increase. Yeah, I'm not a huge footwear stock owning person, and I don't buy Rocky Brands. I've never even really heard of it, honestly. But this one looks good. If you are a footwear person, let me know what you think. But the forward PE looks good on that one. Revolve Group. We can see a gap at $18. Revolve. We're going to see what this is. Ooh, nice little curly Q. Curling up. Okay. This one could be worth diving deeper into. Ooh, they make over $1 billion and they're profitable. I just got goosebumps. Okay. So Revolve Group is the next generation for Millennial and Gen Z. Okay. I've never heard of them. Okay. Wow. Freaking insane. Beautiful margins. Oh my God. You guys, we're gonna dig into this one. Total assets 627 million, total liabilities 242. That is more than a 2.5x. That is beautiful. Total cash on hand, historical high, beautiful. Long-term debt is also pretty high, but nowhere near concern levels. No insiders are buying. Okay, so we're gonna dig into this one because I got goosebumps. This is not good. This is great. This is fine. What gets me is the over $1 billion in sales, profitable, no dividend, low float, heavy short. Ooh. This is like the prime optimal buying if you are someone who likes to buy stocks at a discount and you have a very long time horizon like myself. Nobody likes to freaking buy stocks when they go on sale. But if you see food, deodorant, shampoo, shoes, socks, if you see that go on sale, you're going to snap it up. But if you see stocks go on sale, you're panicking. This gives us, okay, discount vibes. It's being shorted, additional discount vibes. So we're gonna do this. We're digging into this one. So they do have a 1 billion market cap, so we're gonna include this in the calculation. They do bring in 28,150,000 in income, and they do make 1,070 million in sales. Insane. Okay, let's go add the cash and remove the debt. And we'll look at the quarterly levels. Okay, quarterly we do have plus 245,450,000. Total debt is low, is 34,130,000. All right, and total shares, we're going to divide this by 37,980,000. $70 stock price. Has it ever gotten to 70? Yes, it has. Oh, mama. Oh, mama. Oh, mama. Okay, what are institutions doing? RVLV. Yo, a $70 stock trading at 20? Whoops, sorry. Okay, institutions own a 68%. I'm going to say higher. 81%. And it's still holding the record high pretty much. You can see a nice little divot there, but wow. What are Vanguard and BlackRock doing? They own everything. Vanguard increased their position. Kane Anderson increased their position. William Blair decrease. FMR decrease. BlackRock increased. All right. Well, I see a couple greens, a few greens, more green, more green, more green, green, 1 red, 3 red, 4, 5, 6 red. Okay, we're getting some red, some greens. Here we go. Okay. It's a good mix. It's a good mix. It's a good mix. A lot of these non-colored ones, by the way, it's companies adding or decreasing to their position or taking small positions. So Revolve, I'm writing this down. I have to get into this one. I'm okay adding $20 to this every week for a year. How much is that? $20 a week times 52 weeks in a year. Yeah. While the price is going down, Why not? Okay. I like that one. Superior Group Apparel Manufacturing. Wow, this one's gone over 100% in less than a year. Wow, okay. They're profitable. Sales are topping out, that's fine. Shares outstanding, slightly going up. EPS positive. Overall, man, every time it goes down to $7, it just shoots up over 100%. Every time. You can see it right here, and right here. Crazy. They're expensive at the moment. In the future, they are about average. Corporate identity apparel. Interesting. It's kind of cool. Decent margins. The CFO is buying the stock. Okay, these guys are selling. That's fine. Is Kused getting options? Yes. 9,000 in options, 9,000 sold. Himstein, 7,000, 7,000. No red flags here. This looks decent if you're into corporate apparel identification clothing. Historically speaking, this stock is, wow, it's been around for a while. Wow, this stock has been around since freaking 1984. That's 40 years? Crazy. 30? No. 40 years. Wow. All right. If you would have bought back in November of 1992 or January 1993, you don't have that much of a gain right now. No, they do offer a dividend. Okay. It's the momentum's on this side. So if you want to get in this for a swing, I wouldn't fight you on that. But this candle is it's giving me bearish vibes. So I would maybe wait. And it's also up over 100% in less than a year. So this is also something I'm not attracted to. Again, I like to buy on the way down to ride it on the way up. So, kind of cool. Cool discovery. All right, this is Auto Parts in the USA. Oof, this is a bear flag if I've ever seen one. Flagpole, boom. Yeah, this is going to go down to 40s. I would take out a short option on this one. A put. I'd buy a put for this for sure. I think this is going to go to 43. In fact, I'm going to draw this line right here. We have support right there. All right, so I think it's going to go down to 43.88. And that is because we have our flag pole, and I'll go ahead and draw it so we can visit this one in the future. Here's our flag pole. I'll make it colorful and thick. And let's make it blue. All right, and then we have our flag pole. I'm just messing up all over the place. So we have a flag pole. Now we want our flag like this. All right. And generally it's going to go down. So we're going to wait on this one. However, I think at the $43, it could be worth looking into again, but I don't. Oh my God, look at this. Beautiful, beautiful. Give us a pullback. It fell from 80 to 45. I think there's another pullback in here. We'll revisit this one in the future. Goodbye. Zoomies. Wow, I haven't bought Zoomies in decades. That's funny. Wow, all-time low. Is this company going out of business like this chart suggests? Every time the stock gets down to $12, which this one did last month, it's gone up considerably. Is this time different? That's my question. They're not profitable. They have a nice quick ratio. They are considered expensive. If the forward PE shows that they're expensive in the future, they're expensive now. So high level, we're going to look for zoomies to come down to not that low, but we're going to get okay. We want to see zoomies come down to at least $11. And again, we have money flow going down right here. Strength is also heading on the way down. Momentum looks very confused right here. And the relative momentum is just scraping the bottom of the barrel, getting all the sediment and the dust and the chunks. We are okay to wait on this one. This is the last time it was at this low. Look right here. Look right here. $7. And then it rose 500%. So a little more patience. I am going to create an alert on this one because I don't want to miss the next run. And we're going to put under $10 to get it back on our radar. Below $10. Save. Awesome. All right. That brings me to the end of my consumer cyclical sector downtrend year to date with stocks over $10. If you made it this far, consider subscribing. I hope you're doing well. Thank you so much for watching. Adios.